Hi there, welcome to Neppy Invest. Sometimes when you write a comment to me, I'll actually read the comment and think, why not? And it is exactly happened today on the 6th of December, 2023, when I saw a message from George VV50K. Hey, Neppy, I've recently started investing, blah, blah, blah. I was wondering if you could make a video on BPG. This is a SaaS stock listed on the New Zealand Stock Exchange and ASX that focus on SEO data for American companies. Blah, blah, blah. So, okay, a company I know nothing about shall do a video on PPG. So here we are. Now, first thing I did, and I do know BGP is an illiquid company, highly illiquid company, and this company is called Briscoe Group Australasia. Okay, BGP, Briscoe Group Australasia. Now, I've also opened up the homepage for this company, and this is where we have some problems because I did notice here, as I opened up to prepare for this video, that this does not look like a SaaS company. In fact, Briscoe is a holding company for retail stores Briscoe's Hardware and Rebel Sport, which are located throughout New Zealand. So yes, Briscoe, with the ticker code BGP, is a New Zealand-based company, and they also have dual listing on the New Zealand Stock Exchange and the ASX, but they're definitely not a SaaS company. So I thought, when I actually did see this, I thought I would end the video here and write a comment back, reply back. But I thought, why not do a video on Briscoe Group? Because I know nothing about this company. And the very fact that now I know it's a retail company with two sort of subsidiaries or whatever, Briscoe's Hardware and Rebel Sport, which is interesting enough. I thought, yes, why not continue doing a video on this particular company? As I mentioned before, the only thing I know about Briscoe before I started this video was the shares in this company are illiquidly traded. I'll talk about that in a second. So right now, I'm going to reply to this particular comment and say, need more information. Oh, the other thing is I actually just put in BGP here, and the thing that comes up, the only thing that comes up is Briscoe Group. So there's no other company on the ASX that has BGP in it. So maybe I was thinking it could have been Bridge SaaS Limited. So possibly this was just a mistyping. So if it is mistyping and you meant you meant E instead of a G, I just tell me, inform me, and then I'll do a video on a Bridge SaaS company. Need more information? BGP is not a SaaS company, etc., etc. I'll redo the rest of this comment later on. So let's get stuck into looking at Briscoe Group. So we already know right now they are a holding company for Briscoe's Hardware and Rebel Sport. Now, I want to just look at their About Us. And I'll just zoom in a little bit here. And we already know what they're doing here. So bricks and mortar stores in all New Zealand cities and major provincial towns in New Zealand. So no stores within Australia, according to this. Now, the one thing I want to look at here is directors and senior management. Typically, particularly focusing on the CEO. So typically the CEO is in a senior management. So we are looking at CEO here. And typically the CEO will come first, but we have Chief Financial Officer, Chief Operating Officer, Group General Manager, Chief People Officer, General Manager, and General Manager. So no CEO there. So more than likely it's going to be in directors. Okay, definitely not. Here we are. Rodney Adrian Duke, who is the Group Managing Director and Deputy Chairman. He spent all his working life in the retail sector. Comes from Adelaide, so he's an Australian, moving to Waltons in Sydney 1980. Well, he's extensive experience. 81 to 88, he held the positions of New South Wales Manager of Homecraft, Sydney, and never heard of that, for Grace Brothers, then Managing Director of Norman Ross. I actually have heard of that. In September 1988, Rod was appointed Managing Director of Briscoe's, New Zealand, at that time a subsidiary of Hagemeyer of the Netherlands, with mandate of returning the company to profitability and preparing it for sale. In January 1990, Rod reached agreement for the R.A. Duke Trust to purchase 100% of the shares of Briscoe's. 1996, he established and in subsequent years expanded the Rebel Sport chain of sporting goods stores in New Zealand as a business within the Briscoe Group. Briscoe Group issued shares to public in 2001 and listed on the New York Stock Exchange. The R.A. Duke Trust continues as the group's majority shareholder. So at this point in time, I would say one of the reasons why this company is liquidly traded is because Rodney Adrian Duke, through the R.A. Duke Trust, owns a significant amount of shares. And we can discover whether that is true or find out whether that is true later in the video. So we know who is the big player, the big person, the main reason this company is in existence right now. And it looks like he's done an absolutely brilliant job in this role with the Briscoes since 1988. So we're talking about 35 years. Next thing I want to look at is some facts around this company. So I've just gone to market index. I've already put in the code of the company, Briscoe Group. So market cap, $1 billion. Market cap, $1 billion. This is a big company in terms of market cap. And not only that, dividend yield 5.91%. And what's the PE ratio? Earnings per share, 38 cents, which means the PE ratio is just above about 12 or so. Shares on issue, 222.8 million. It is the 303rd biggest company on the ASX. I don't know if we can put in New Zealand-based companies. No, we can't. So a big company. What else do I want to look at this point? So we can have a look at the announcement. So because this company is based in New Zealand, they would have released their half-year results in September, and they did on the 13th of September. We won't have a look at the half-year results. I'll have a look at the annual report later in the video. In fact, what I'm going to do right now is go to announcements, not yet Bridgeco. I'll go to announcements, put in 1 year, and then I'll open up the annual report, which is released on that 6th of April. I just want to see how this company performed in the last financial year. Okay, so that's all I want to do through. We could do a little bit more here. So Rodney Adrian Duke, tenure 53 years and 11 months. January 1970. That sounds wrong. That does sound a little bit wrong, market index. Maybe I am wrong, but that does sound wrong. And director interests, Rodney Duke. So Rodney Duke owns 171.6 shares. That's indirectly through that trust. So that's a significant proportion of the shares on issue. So more than likely, unless he wants to get rid of this business, there won't be a takeover bid for Briscoe Group. And another side effect of him having a significant portion of shares in this company is it is liquidly traded. The next thing I want to do is actually go to ticker just to verify this. So we'll put in BGP. And what we'll do is, for some reason it's not going to company overview. Here we go. Ownership, just verify here. So Rodney Adrian Duke owns 171.6 million shares in this company, 77% of the overall shares, valued at almost $500 million US dollars. $500 million US dollars. According to this, also Harvey Norman Properties New Zealand owns 2.4%. Gerald Harvey owns 2.4%. So Jerry Harvey owns a little bit of this company as well. So interesting holdings there. So we don't need to look at ticker anymore, but I'll leave that open in case we want to have a look at it further. Now, on to the depth of this company. So I've already mentioned this company is liquidly traded, and you can just see this by the summary. So at this point in time, right now, I'm recording this video just after trading has finished for the day. At this point in time, there is only one bid in the books, and that is one sell bid for 538 shares. No one wants to buy this company right now. There was, according to this, there was one trade today for 48 shares, valued at $216. It did raise a price by 2.27%. The other thing I like to look at is trade history. So last time the shares traded was actually yesterday, so that was 152 shares. And the previous to that was the 29th of November, 5 shares. Previous to that was the 21st of November, 1 share. Previous to that was the 18th of October, 1,338 shares. So very rarely are there significant shares traded in this company. So last time was the 18th of October, and the previous time before that, and I'm not going to say 267 shares is significant, and the time before that was the 13th of September, and then the time before that was the 6th of June. So you will hear the term lobster pot being talked about a lot. This is actually the definition of a lobster pot because shares are very rarely traded in this. But if you do research in this company, you like the financial performance and you think this company will grow in the future, there's no reason not to buy shares in this company. Don't be concerned about the lack of liquidity, because one of the benefits about lack of liquidity is the very fact that many or most fund managers won't take positions in this company. And if the company keeps hitting their goals and keeps on growing, this company's shares will become more liquid through time, possibly. Anyway, and possibly the CEO, I've already forgotten his name, will start to sell some shares, which could cause a little bit of panic in the market, but that would improve the liquidity. And one of the things I like to do is, instead of, and the reason why some experts say these companies are lobster pots because it's easy to get in, hard to get out. I disagree with that, because if it's easy to get out or easy to get in, it should be easy to get out. And if it's hard to get out, it should be hard to get in. But one of the reasons I like these sort of companies that are liquidly traded is at the start, when you buy shares, it is hard to get in. And then when you get out, as liquidity increases over time, it's easy to get out. And one of the reasons it's easy to get out is because the liquidity has increased as the company has grown through time. This has happened to me quite a few times. So don't be afraid about illiquidity. It is actually your favor, these sort of companies, because fund managers won't take positions in them. And if they do succeed, the share price can go on pretty significant runs. Now, in saying that, this would probably be, if I took a position in this company, it'd probably be the most illiquidly traded company I've ever taken a position in. Anyway, so that's in regards to a liquidity of the company. Now let's have a look at the financial history. And I've already put Briscoe, so I just put BGP in here. I'm not sure what the company was. And now we can have a look at the financial history of Briscoe. It has been around for a while, listed on the ASX for, I think it was about 2017, if I remember correctly. And we can confirm that through Market Index. So what you do in Market Index is see the announcements here. What you do is you press the last button here. It takes you to the very first comment or the very first announcement. So admission to official list, the 19th of July, 2017. I don't know why I remember that, but I remember this company listing on the ASX back then. There's no prospectus. I do like to see a prospectus. And sometimes I will look at the prospectus, but that's 6 years ago, and that's probably a little bit too long of time. Anyway, let's go back to the financial history of this company. So some of the things I look at is growth in revenue per share, earnings per share, book value, and price. And we get that in Guru Focus on the first page. So this is the 30-year financial data. Revenue per share growing at 6% per year over the past 10 years, 5.7% over the last 5 years. Now, I would prefer that to be a little bit higher, but that's pretty good. And the reason I think that's pretty good is because of the dividends of this company. So if you add the dividend to the revenue, you're going to get some good returns. And over the past 5 years, this company has given the shareholders a 12.6% return per year. In fact, if we go to the New Zealand company, we might have a total return over the 10-year period. Yeah, here we go. Okay, so let's look at the New Zealand page, because this company has been listed on the New Zealand Stock Exchange for longer than 10 years. So revenue 6% per year over the last 10 years. Revenue 5.7% over the last 5 years. This is revenue per share. Earnings per share 12.9% and 9%, 10 and 5 years. Book value 10%, 3.2%. But look at the total return, 12.3% and 12% over the last 10 and 5 years. A nice return over a 10-year period. So that includes share price appreciation plus dividends. So that's the sort of returns you might be looking for, market-beating returns. Other things I like to look at include return on equity and return on invested capital. The things I'm looking for here are return on equity and return on invested capital greater than 10 throughout a 10-year period. And we definitely have that for this company. Return on equity, definitely well above 10. In fact, well above 20 for most years. In fact, since 2012, it's been above 20. That is telling me this company is a very efficient and profitable company. They can turn their assets, their equity into profits, which is a good sign. Return on invested capital above, yeah, generally above 10, sometimes as high as 40. Don't necessarily trust return on invested capital numbers these platforms have. Return on capital fairly high as well. The other thing I want to look at is gross margins. Gross margins just below 40% back 10 to 15 years ago. And now it's above 40%, getting towards mid 40s. So gross margins have been increasing through time. That's another thing to like about this company. Revenue has gone from $388 million in 2009 to $785 million. So revenues have more than doubled over the last 15 years. We've already talked about gross margins. What else do we want to look at? PE ratio. Let's have, where's the PE ratio? No, I haven't got it to it yet. Okay, another thing I like to look at is PE ratio history. So you can see PE ratio tends to be fairly low for this company, between 10 and 15. Another way to do this is actually have a look at interactive chart. And instead of the price, we're going to look at the PE ratio of this company. And yeah, we'll look at the last 15 years. Actually, no, we'll look at the last. There's a big spike in the GFC. Okay, so this is the last, we'll say, 13 odd years. We did see the PE ratio get to about 30 back in 2017. But generally, the PE ratio of this company is between 10 and 20. Whenever it gets to about 10, that's probably a good time to take a position in this company. Whenever it gets to about 20, that might be time to maybe offload your shares if you are trading this company. Another way to look at it is when it gets to about 10, you might say or argue this company is undervalued. When it gets to about 20, maybe overvalued. So right now it's at 12, just above 10. So possibly you could say and argue that this company is undervalued, just possibly. And now let's have a look at the annual report. Now I'm going to focus on the financial statements. So the financial statements, 24. So there are many things I'm looking for when it comes to financial statements. So we'll start with the profit and loss. We'll eventually get to it. So yeah, $785.8 million of revenue, up nicely from last year. Nice gross profit. We've already discussed this. And profit $88.4 million, up from $87.9 million. Earnings per share around 40. What's the share price again? $4.50. So yeah, the PE ratio just above 11 based off the earnings per share for the last financial year. So nothing too concerning when we look at the profit and loss statement or the income statement. Now on to, we won't have a look at that. We'll have a look at the balance sheet. So I'm looking for a sign of healthy balance sheet. So I do prefer cash over debt. We want to see if the company has too much debt, compare the debt to the equity. Now, I do some things a little bit different than a lot of other analysis. I don't necessarily assume that lease liabilities are debt. That's just me. I'm looking for other debt that is not lease liabilities. Now, the reason I'm talking about lease liabilities, because more than likely this company has a fair bit of lease liabilities unless they own the land. But just looking at this in liabilities, they have a fair bit of lease liabilities. So some people would probably say that is debt. Not me. But in saying that, cash and cash equivalents, $150 million, inventory is $117.8 million, and the cash on hand has actually grown a fair bit from last year. So when we look at the total equity, a nice increase, $9 million increase from $299 to $308.5 million. And that's why this company has a really good return on equity, because the profit, what was it, 88 million, total equity 308. So this company is a really good, really efficient earner, I suppose you could say, a profit maker. I suppose they are really putting their assets, net assets, to really good use. That's what the return on equity or high return equity is, a really good, efficient way of using that net assets. So equity is net assets, assets minus liabilities. Okay, so now the cash flow statement, which is interesting because the cash on hand actually did increase a fair bit. What was it? $47 million, which suggests the free cash flow was quite good. And the free cash flow would actually be better because they're probably not including dividends. We don't include dividends when it comes to free cash flow. So let's have a look. Okay, net cash flows from operating activities, 144.4 million. They spent 13 or $15.6 million on capital expenditure, which means the operating cash flow for this company was around about $129 million. So if you calculated the EV to operating cash flow for this company, maybe we can do it right now. If I get my calculator out. So EV, so what was the market cap? We'll say $1 billion. They have net cash of, now this is where it becomes tricky, how you deal with lease liabilities. So if you include lease liabilities as debt, you'd say this company has net debt. I'd say this company has net cash. So what I'll do is instead of EV to operating cash flow, I'll just do price to operating cash flow. So $1,000 is the price, which is the markup cap in $1 million. And the operating cash flow, what did I say? Or the free cash flow, what did I say? 129 million. So 129 million. Whoops, got to divide it first. Divided by 129 million. Price to free cash flow, 7.75. So a lot of times when I look at the price to free cash flow, the number range I'm looking for is between 6 and 10. And typically when I see a company, and this is all other things being equal, because you're going to, that range is going to be different for many companies. So I wouldn't use that range for a really high quality company, and I wouldn't use that range for a really, really low quality company. But for Briscoe, I think you can use that between 6 and 10 range. And for this company, it's 7.75. And the reason I use that range and the way I look at it is if a company's price to, say, free cash flow is in that range, there is an argument to say that company is really good value right now. So I actually could say this company is really good value right now. Now, the reason why the cash increased by a significant amount, over $100 million, is because they spent $61 million on dividends paid and lease liability payments at about $19.1 million. So overall, cash on hand still increased by a fair bit, $47.4 million. Yeah, $47.4 million. Even though they spent money on dividends, capital expenditure, and lease payments, the cash on hand still increased by a fair bit. Okay. The last thing I want to talk about in this video is the revenue disaggregation, which is usually found in the notes. Did this company issue a presentation when they released their full year results? More than likely they didn't. No. That does not matter. So let's have a look at the disaggregation, which usually is found in the notes 1. So subsidiaries, we already know subsidiaries, Briscoes, New Zealand, and Rebel Sports. It says there's another subsidiary here called Living and Giving Limited. Okay, so eventually we'll get to segment performance or information. And this is disaggregation. How did each of these segments or divisions, which is Briscoe's Homeware and Rebel Sporting Goods, how do they perform? Revenue for Homeware, $487 million. Rebel Sports, almost $300 million. And just by this, simple looking at this, it seems like the Rebel Sports is has better gross margins and better profitability, because the profitability is $36.7 million for Rebel Sports and only $47.4 million for Homeware. You can also compare earnings before interest and tax. So both segments actually doing fairly well. The way you can do that is just look at last year. So a nice increase in revenue for both, and a nice increase in, no, actually profit fell for Rebel from last year to this year. And I think that might be all I want to talk about in this video. Yeah, that's all I want to talk about in this video. So before I received this little comment from George VV5OK, I had no reasons to do any research on Briscoe simply because the shares were so illiquidly traded. Yet, what I found could be defined as a high-quality company. And probably the only negative about this company is liquidity of shares. And I think if the liquidity was better, based off what I have found in doing a little bit of research, This would be a popular company, not only on the ASX, but also on the New Zealand Stock Exchange. And I never hear this company being mentioned in any podcast, videos, Ausbiz Core. So probably management, what they could do is try to increase the liquidity, try to get the name of this company out there, but that might be a problem because that CEO owns 77% of this company shares. So if you have any questions about Briscoe, if you have any thoughts about this company, I'd love to hear your thoughts. So leave your comments or your thoughts in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for the video. Have a good day. Bye. I'm just going to finish this reply. See ya.